Ladies and gentlemen, welcome to episode 23 of the Ark Podcast. Last week, I brought you an episode with a friend, Bisher, who was actually talking about cryptocurrencies. We went through basically crypto for dummies, what's going on with the Trump presidency, what's this transition plan, what's his plan to purchase a million bitcoins for the US reserve of the currency, and how is this going to impact the markets, how is this going to impact the world of finance. A lot of you are going into Christmas right now. It's December. You're going to be engaging with your family. You're going to be talking about that excess income you've got, your investments, your superannuations. Where should I be putting it? Should I be putting it into gold, crypto, land? Should I be diversifying it a bit? That's what this particular podcast is about. I want 2025 to be the most prosperous year for you and your family so that you guys can be raised above the parapet, or above average Australians that are here. I want you to do really well. I want our people to be absolute Spartan warriors and to have the means to keep going despite the high cost of living. That's why I'm doing these particular podcasts, and I'm parking the political until probably after Australia Day, because that's a very political topic. But without further ado, allow me to introduce our guest panelists that will actually be helping us meander through this particular topic. First one's up is Sam Lawrie from Liberty Bullion. Sam's gifted me a phenomenal silver coin of the Trump fight, which I'm looking forward to showing off over Christmas. I've also got Bisher on my right as well from Stormrake, who joined us on Monday. Bisher, this is strike 2 for you, episode number 2. And on my left, I've got Tim Manger from Beat the Reset, phenomenal bloke. And I'll have his social media in the description. Ladies and gentlemen, welcome to the podcast. Bisher, mate, do you know how many people hit me up after our podcast and were like, Joel, I love what I'm seeing in the US. I want to invest. Where do I start, basically? And you really did leave an impact on people. What was the response after the podcast from your end and people clicking the link?
As soon as I jumped on and we finished up, I had about 50 missed calls from people who were watching the Ark, wanting to jump on and get invested. So the appetite, the demand, the desire is so strong, and it's really good to see because the last couple of years there was a bit of a bear market. There was a severe lack of interest, and now it's becoming a reserve asset. It's become a political issue, and now people are starting to realize, when there's issues with fiat currencies, Aussie dollars, US dollars, euros, they're all worth zero. What's the alternatives? And Bitcoin has come to the forefront. And I mean, if you look outside of Bitcoin, things like XRP has done a 500% return in 30 days. Hedera has done a 700% return in 30 days. Simply astonishing stuff, right? And so for anybody who invests just even a little bit, that's quite transformative. If you put in 5K and all of a sudden you're sitting on $25,000, that's a nice little Christmas gift for yourself, that you can be able to do with in 2025.
Yeah, no, absolutely. I've had one of my friends of mine, he contacted me. He's like, Joel, I've got a lot of money in super. Should I be thinking about diversifying what I'm doing with that? I really actually want to start looking into crypto. But he's an older gentleman. He started asking me about wallets and this and that. And I was like, mate, I've had a big learning curve with this stuff. A lot can go wrong, basic stuff you guys would laugh at, like don't keep your money on the trading platforms. Don't, forget to write your wallet numbers and backup words everywhere and have backups on backups and keep it off digital and all of that. But you guys basically take all of that off people's plate.
Take the stress out.
Right.
Yeah, take the stress out. The whole point of it's a service rather than a platform. We want to help people get educated, understand how to invest into this wonderful asset class, how you can do it in a way which is safe and reliable. We provide education on how to be able to set up your own wallets. We provide our own custody. People come up and just literally pick up the phone, and that's how they can make an order. It's like an old school stockbroker, but for a new world asset class. And that's really cool because a lot of people who are in that over 45, over 55 demographic who really want to get invested, but might not have the comfortable nature of dealing with fast-paced technology such as Bitcoin and blockchain. They come to us, pick up the phone, send an email, and they get that old school service that they've come to know and love from back in the day. We get to bring that in, and they still get the exposure, they get the upside. But following that, that's why I was like, look, you need to have diversification, right? You need to have that Bitcoin exposure in your portfolio. The only wrong position, and I've always said this, is zero. That's the only wrong position. Once you get off zero, happy days, right? Even if it's a few $100. right? Get your feet wet, get invested, because the last thing you want to be doing is having zero exposure to the biggest and most transformative wealth transformation event in our lifetime.
And you work with Sam. You offer a service where you can actually transfer the crypto directly into gold.
Correct.
And obviously, that to my audience, that's like, oh my gosh! So you don't have to go via a bank.
Don't touch a bank. So Sammy and I, we got together at it was like March, April of this year. This was before Bitcoin went on its parabolic move, and he's always been very bullish on commodities and bullion. I'll let him talk about his story. But I said, man, we should figure out a way where we can convert bullion to crypto and crypto to bullion, like without having to touch a bank account. People would love that, because the way I see it, Bitcoin is a decentralized asset. It's out of system. It's not a bank account. It's not a stock brokerage account. It's got nothing to do with your superannuation, although you can set up SMSFs to trade these assets. You need to be able to trade out of system, because if you've got a ton of Bitcoin, you've got a ton of gold and silver, and you don't want to deal with the banks, we need to provide a way where you can get liquidity between these assets. So Sammy and I got together, had a chat, and so let's say you've got, say, 1 Bitcoin, and you want to take 50% off into gold. You want to put, it's worth about $75,000 now. You contact Sammy, say I'm buying $75,000 worth of gold with you. He raises me an invoice. I settle it for you in Bitcoin. Job's done. Magic. And then it goes vice versa as well. We had one of our clients recently sold some silver with Sammy, got a bunch of ISO tokens. He's absolutely laughing now, up 700% in the span of 30 days. And he can rotate a good chunk of that profit and then some back into silver to reestablish his position, having never touched a bank account the whole time. And then if you do want to dispose of worthless fiat currencies, you can contact myself and Sammy, and we can dispose of it very, very quickly and efficiently for you.
It's funny because, Sam, a lot of people would think that the crypto and gold, they're competitive, they get into all that Peter Schiff debating stuff, and it's like, no, gold is superior and this and that. But you guys are doing it sort of like hand in hand sort of thing, a partnership.
Absolutely. So for me, I see a lot of gold people be very adversarial with crypto guys, and vice versa as well. And something that Bisher and I have said is that we're putting the knives down here. I mean, I actually started trading crypto before I got into gold. So I've come into it the other way. And for me, I can definitely see the value in trading crypto. I've done very well personally from crypto myself, but I also see the need in someone's portfolio for a safe haven asset that performs well when things go bad around the world. And something that performs really well during periods of high inflation, which is, again, something we're seeing across the world, something I'm expecting to really pick up, cost of living crisis, etc., etc. Gold and silver are your protector during times like that. So combining the two asset classes, combining cryptocurrency, which is highly volatile, speculative, it's something where the market can move extremely quickly and you can supercharge your portfolio gains. You combine that with a safe haven asset class like gold and silver, and your overall portfolio risk, depending on how you weight them, no riskier than the normal portfolio of stocks and bonds, but the performance...
Bonds is garbage.
Bonds are garbage, don't get me started. But the portfolio return overall on that portfolio is way higher than a traditional portfolio with the same risk level. And that's what it's really about for us, is combining these two asset classes together, low risk, high risk, gives you what you need.
Tim, where do you see us in the whole scheme of things? I mean, I've been following crypto since only 2017. When did you start, and where do you feel like we are in the timeline of things with it?
Well, this is a great question. I'm a researcher of monetary history, and I look as far into the past as I do into the future. I feel like we're at 1932 in about the June, just before the collapse of Wall Street and the collapse of the US dollar. I feel that is exactly where we are. I've always felt like that. The last great reset could arguably be 1933 in the United States. That's really where I see our currency now. It took the Federal Reserve 20 years to collapse the US dollar from $20.67 an ounce for gold to zero in just from 1913 to 33. The last blow that the Federal Reserve struck on the common man in 32 was to do what they just did 2 months ago or 3 months ago, and that is lower the interest rates. That, of course, makes something that nobody wants very attractive, which is, of course, the US dollar. And all of these assets are valued against the US dollar, but they have intrinsic value in themselves. So the fundamental, I guess my point here is the fundamental difference between currencies and cryptos and decentralized digital assets and gold and silver is one is intrinsic and the other is a confidence trade. So the US dollar is purely, in my opinion, a confidence trade, and our poor old Aussie dollar is pegged to the US dollar at about just over half. And with a dollar that has 1 cent of value left, I mean, this is the problem for the US dollar. There is 1 cent of value left in the US dollar. And people often say to me, but, you know, we're not being told that. The Federal Reserve told us that things are strong, and Janet Yellen and the Treasurer, you know, came out and said, you know, we're transitioning. What is it, transitional?
Inflation is transitory.
Inflation is transitory.
Yes.
Yes, it's also catastrophic if you stay in it. And of course, these are confidence-based markets as against real monetary systems. I want to say this, and this is really where my channel comes into the fray, is that the fundamental misunderstanding that people have, and the one mistake, and I'll get the buy-in from the gentleman on this one, is that currency somehow has value. In my opinion, it hasn't. It never has had. I mean, it could be argued when it was gold-backed, it had value, but it really was only gold-backed for a very short period of time, which was from 1900 to 1933. And I know there's a million people out there who'll start saying, no, we're on the Bretton Woods standard from 44 to 71. The US dollar collapsed at least once during that time. So I guess this is really where I sit, is that people are running around with pieces of paper in a confidence-based market doing stuff that makes no sense and wondering why, in the end, 70% of the middle class die in abject poverty with zero in the commercial bank. So I'll get your buy-in on that one, guys. But
absolutely. Yeah. I mean, like, this is why I think you see comments, for example, from Jerome Powell, who's the current chairman of the Federal Reserve. He came out yesterday on this big CNBC panel, and he said, I don't really see Bitcoin as a competitor to the US dollar. It's just a speculative asset. It's a high-risk asset. I see it more as digital gold. He goes, and then he continued to add that I see Bitcoin as more of a competitor to gold than it is to Bitcoin. And one of the biggest and most well-known political tools that you can have, which is quite divisive, it's called divide and conquer, right? So what is the two best assets, when you put them together, has the strongest probability of replacing fiat currencies? And that's Bitcoin and gold together. That's why you have your guys like Michael Saylor, who's a relentless Bitcoin bull. I love him. I love Peter Schiff as well, who's a relentless gold bug. But they're focused, they're missing the forest for the trees, right? When they kind of say only Bitcoin or only gold. And then you have Jerome Powell, who comes out, who is a political agent, and comes out and says Bitcoin is a competitor to gold. They're trying to obfuscate the real risk. The real risk is what Tim has mentioned. People realizing that the US dollar is worthless, and if the US dollar is worthless, all fiat currencies are worthless, right? So they're trying to distract the people.
But with Peter Schiff, can I just say, doesn't he say that, look, I'd probably back a Bitcoin that's, you know, sort of backed by gold, like a crypto that's backed? Isn't there one that
you're getting closer to what our research, what Tim's research has kind of led us towards, which is the future isn't a US dollar hegemony anymore. The future isn't the euro dollar market. The euro dollar market, just so people know, and I'll break down as complex concepts as I can, as the simplest way possible. It's not the euro USD cross rate. The euro dollar market is any two nations outside of America that trade with each other. They use US dollars. The US dollar is the global liquidity, it's the global reserve. So for example, Australia trading with China, right? They want our coal, they want our iron, right? They don't want our Aussie dollars, right? And we certainly don't want their Chinese yuan. So what do we trade in? US dollars.
Yep, goes via US dollars, yeah.
Correct, every time, right? And it goes through the SWIFT system and all kinds of things, right?
Yeah.
There isn't a single transaction between even massive nation states that doesn't go through the US at some point, right? It has to go through the US dollar. And then we can also talk about the petrodollar, but let's just keep this example as simple as possible. You end up with a situation where you don't need the US dollar if you've got Bitcoin and gold, because you can settle international trade through Bitcoin and you can back your sovereign wealth, your sovereign nation through gold, right? You put Bitcoin and gold together at a macro level as large as nation states. You put it down at a micro level just between yourself and your household, your superannuation, you do it at a small level. You just follow what the big boys are doing. Central banks, Sam can probably speak about this a little bit better, are buying gold in the tonnage, right? And they're now going out and forming a strategic Bitcoin reserve. Just look at what the big guys are doing. Look at what the governments are doing. Look at what Wall Street is doing, right? They're going out and buying what? Bitcoin and gold, right? You just follow the same trade and you become incredibly wealthy. You don't have to overcomplicate it. Gold's that kind of safety net for you. And then Bitcoin supercharges your portfolio returns.
Speaking of which, I do believe it was Putin that said, you might know this, Tim, he said that we don't have any plans to get off the US reserve currency. And it was really funny because obviously that was after Trump's president. Trump became president and he won the election. But I just saw this article come out 5 hours ago, which saying this is from Putin. He said, "Who can ban Bitcoin? ? Nobody. And who can prohibit the use of other electronic means of payment? Nobody. These technologies will develop one way or another as everyone seeks to lower costs and improve reliability." I mean, it seems as though, for now, the US reserve currency is the US dollar. It's going to the currency is the US dollar. It's going to stick to that for some time now. But yeah, it is definitely moving in this direction of cryptocurrencies, of Bitcoin being the most stable of them. And obviously that's leading a lot of people to think, well, to what extent should I be diversifying my particular portfolio? I think you will find this a little bit interesting. I put that question to Grok, which is the AI for that Elon Musk has set up on X. And it came back basically with this really awesome multivariate analysis. If you can bring this screen up, Steve. It's got cryptocurrencies pros and cons, gold's pros and cons, and property pros and cons, and overall allocation of a potential balance. And it says, cryptocurrency 1 to 5%, gold 5 to 10%, property 20 to 30%, which we're going to get into in a second. And obviously that only adds up to about 45%. I'm assuming the remaining amount would be like in your in Aussie dollars if you're an Aussie listener.
I'm definitely not following that advice because I'm 100% allocated towards Bitcoin and digital assets as well as gold and silver because, look, I'd like to speak to about that, and I think the boys can also weigh in on that as well.
Sure. So you're all in on crypto for that. What about you, Sam? Would you say bit of a balance on all?
I would say I've got a balanced portfolio. I definitely hold a fair bit of gold and silver, that's for sure. I've done quite well off it, but I also do trade a fair bit of crypto. I'm a relatively active crypto trader. Also trade derivatives, contracts for difference. So I've been trading for almost 8 years now.
Right.
But yeah, in terms of portfolio allocations for the long term, at the moment, I'd say I'm slightly heavier weighted metals, but I've also got a lot of crypto in my portfolio at the moment. Plan being that at the end of this bull run, I'll take a lot of that profit into metals and increase my metals position.
Right. Nothing in land? Like
I have no interest in property in this country. I don't see it as a wise investment. I mean,
overvalued.
Here's the thing. My gold is up 30% for the year. Crypto, I'll let Bisher talk about.
Right.
What's land doing? I mean, and here's the thing as well. Gold and silver kind of ruin you as an investor for stocks and land in that if I'm not getting a 30% return on my stocks or my land, why would I take risk when I can just buy gold, which is the safest asset there is? Right. From a risk to reward perspective, if I'm taking more risk and getting less reward, what am I doing?
Yeah, Tim, would you go for a balanced approach or would you favour?
Definitely a balanced approach, but it depends. When you talk to a commodities guy and ask what a balanced approach is, you're going to get a commodities guy view.
Yeah.
You talk to Bish, he's very bullish. What do you say, Bish? You're not
saying 0% for everything except crypto.
Well, look, to be fair though, I do hold gold and silver as well. Sam, infected my brain.
Right.
He told me I got to get onto some gold and silver, which I was glad that I did. But to be fair, it's mainly crypto and then some precious metals for safety as well.
Now, this is interesting because people are listening to this and they're genuinely like, even 5% would be nuts.
Well, I just want to. You brought up Putin.
Oh yeah, please, yeah.
And I want to do. These guys are absolutely. These guys are your generals. These guys know how to work monetary systems. These are your boys. I mean, in my opinion, because I've studied monetary systems. Not interested in fiat currencies and not interested... Oh, I'm looking the wrong way, am I? There we go. Not interested in... these boys are just so much better looking than me. I mean, I'm looking...
No, that's all right.
What do you think, Joel?
People want to be a fly on the wall, so you don't have to look...
Do you reckon I'm okay? I'm worried I'm ruining the show.
No, you're right, mate. You're right.
So I want to take you back to something you said, because in order to understand the micro, you've got to understand the macro. You mentioned something interesting that Putin said. I usually stop listening about that point. That's like Trump said, and then I turn off. I tend to listen to central banks and watch what the central banks are doing. And the most important of those central banks is the Bank for International Settlements. Now, whilst Putin is saying whatever he is saying, what people are totally unaware of is that he is a member, his own country has some interesting positions. First of all, it has full veto power on the board of the UN. And secondly, it's a member of BRICS, B-R-I-C-S. The R in BRICS represents Russia. To be a member of BRICS, what do we know? You have to enter something called de-dollarization, something which Saudi Arabia refused to do because of something called the petrodollar, this kind of 50-year-old kind of historic connection with the United States. The only reason that Saudi Arabia pulled out of BRICS was because 60% of central banks around the world still hold USD as their tier 1 reserve. That's because, as Bish mentioned, it's much easier to trade USD. It's just historic, it's just easy to do. Doesn't mean it has any value, but that's what you do traditionally. But meanwhile, behind those words by Putin, what's really going on is the Bank for International Settlements, which is the central banker's bank. If you want to get to the star on the Christmas tree, that is the one. And they are coordinating in conjunction with about 5 or 6 central banks. Most of them are BRICS-based. They're coordinating a brand new digital currency platform to de-seat or dethrone the USD. So the very, very Bank for International Settlements that at one stage in its history would have supported USD as a tier 1 reserve is now looking at digital currencies. This makes Bitcoin, for me, the most interesting. And I want to get... I said something interesting on my channel, and I want to quote myself the other day. And I said this, that gold has largely succeeded and failed as a tier 1 asset, as a reserve asset. It's good for all the reasons that it's bad. It's very rare, and central banks love to print currency. And it's meant to be restrictive. And the whole point of a gold standard is to restrict the printing of the currency to give it value. There was a point in our history right up until 1933, April 5, you could actually take a USD back to the commercial bank and you could exchange it for gold. You can't do that anymore. You could exchange it for silver right up until 1968. You can't do that anymore. No one can exchange this stuff for anything other than, debt and confidence. That's it. So it's only worth, really, in the end, nothing now. But I wanted to make this point, and this is an incredible revelation. And Bisher brought up this point about Bitcoin being a potential tier 1 reserve asset. And I sat with that for a long time, umming and ahhing. And it occurred to me, this is clever. The reason it's clever is because gold, one of the reasons it failed is there is no accountability for gold. If you have a look at the reserves of the Federal Reserve, they don't have any. They're not federal and they're not reserve. The question is, where is the gold? There's 280 million ounces unaccounted for, and everybody seems to be looking at everybody. Now, I'm going to ask Bish a question on this one. Sorry to take over.
No, please.
But if that was Bitcoin, would you be accountable for it?
Yeah, everything is a transparent blockchain at the end of the day, right? It's all available on the public blockchain. And the beauty of it is that you have ultimate privacy as long as you're not disclosing your public wallet addresses, and certainly never share your private keys with anyone. But those public addresses could be kept to yourself, and I can transact with Sammy, I can transact with Joel, I can transact with Tim, full privacy, nobody knows what I've got and what I'm holding, which is great. But then if you're a nation state or you're a central bank, and you're coming out and saying, I'm going to be going onto a gold standard, if you were to have Bitcoin as a standard, or otherwise known as the Bitcoin standard, you would be hoping and knowing that they would have a public wallet address in which you could see the holdings on chain. You could verify for yourself whether they have the holdings or not, which is super important, because if you want to bring confidence which, as you know, Tim has mentioned so many times, back to a US dollar, back to the Aussie dollar, which is a failing fiat currency because it's backed by nothing. It's printed, and it's I wouldn't say it's backed by nothing. It's backed by the end of a barrel, right? You will accept the US dollar, and it's backed by violence. And if you choose not to accept the US dollar, well, then you're going to get a taste of democracy. When it leads into what we see as wars is actually just the enforcement of the US dollar. With that, if we would put that aside, if we were on a Bitcoin standard, you would have full accountability, full transparency for your governments, for your public office. And we've forgotten that, the politicians, they serve us, right? They are public servants. And if we have say for example, an Australian public Bitcoin wallet, then if we wanted to raise money to build infrastructure projects or do something, we would have the ability to enter into a voluntary taxation, right? Because one of the biggest problems with the world right now is if they're not stealing it from you through taxation, they're stealing it through you from inflation, right? Those are the two things that leave, as Tim mentioned, the middle class and abject poverty. So if you were to flip it on its head and go towards a scarce asset, which is ultimately transparent, very divisible, and you can actually show people what's happening, you can move towards a standard where you've got voluntary taxation, public transparency for your public institutions like governments. That's a very powerful position to be in. Is this transition going to be easy? Hell no, of course not. Is there going to be volatility along the way? Most definitely. The volatility is guaranteed. But the volatility is your friend because you're entering into a new paradigm, price discovery. We could get to 250,000, we can crash back down to 80. Yeah. That volatility, that uncertainty that people have of, what Bitcoin is. It's like the platypus of the financial world. It looks like a beaver, looks like a duck. It's got poison in it. What is this animal, right? Yeah. We don't quite yet know how to categorize it. Yeah. And this is why I always say to people, have gold and silver in your portfolio because it's a 5,000-year track record. Sam can speak to it a lot better than I can. But you add that Bitcoin into your portfolio, you've got massive upside, and you don't have to take on property, which means that you are not taking on massive amounts of debt. You're not getting leverage to the tilt. You're not entering into a counterparty relationship with the bank. That's an absolute nightmare. Don't want to have your banks as counterparties. Then all of a sudden you've got an abundant amount of sovereign wealth, which can't be taken from you, which can't be seized from you, and that's all thanks to Bitcoin and precious metals.
Chaos is a ladder, as they say.
Yes, sir.
Yeah. What'd you get out of that, Tim?
Well, I'm a big fan of value. It's a word that doesn't get used in the middle class. We have this word called currency. People talk, debt is what we are dealing with. Let's just, I feel like I should face the screen a bit more.
Yeah, well, if I can say, if you're facing, I had a guest on a while ago who did an LGBT podcast, and they actually did the exact same thing. They were like that. But if your chair's facing forward and
like a newsreader.
You know what I love about the US interview that Joe Rogan did? It was when they did when JD Vance was on with Joe Rogan, and Joe Rogan's going under the table, he's fixing chords and all of that, and I'm like, this is raw authenticity that people want. Yeah. And I think people do get sick of the whole corporatism of hedge funds, of the property management portfolios, of these strata companies, and they're like, speak to me like I'm a human. Especially Aussies. Aussies want you to be real with them. They want you to be raw with them. But sorry, go on. What were you gonna say?
Well, so my view is that we don't understand value as a consumer class. No understanding of value, and the reason is it's historic and it's endemic. It's endemic because we are brought up on a currency system, and currency has zero value. And we hand this stuff around like it means something. And when I come to Sam, I come to Sam for value. When I come to Bisher, I come to Bisher for value. When I move back to my worthless Aussie dollars, which are coloured pieces of paper that somebody drew some pictures on and gave it to you, it's frightening, actually, how poor the value is. And of course, currencies die over time. I mean, we're nearly at zero. Let me tell you, gold and silver and digital assets at zero, you have not seen anything. Some examples of that are Lebanon recently, Zimbabwe, Venezuela, Weimar Republic we speak about. What happens when these currencies collapse? And let me tell you, and again, I go back to the other Great Reset, 1933, April 5th, the gold confiscation of April the 5th, 1933. The reason that the US Treasury was confiscating gold was because people suddenly realized what I'm saying right now is that when the US worthless US dollar, although it was gold backed back then, it's just they overprinted and lent it far too much. It was borrowed a little too much in the roaring 20s. But what did the common man do? The very first thing that happened when the commercial banks were closed on March 6, 33, which asset did they go for? Sammy.
Straight for gold, because gold is money, as JP Morgan said it best. Something that I wanted to touch on that you guys were dancing around there was the protection of property rights that gold, silver and Bitcoin afford you. And this is something that, going back to central banks for a second, Alan Greenspan, back before he ran the Federal Reserve, he actually wrote a paper about gold, and he was very positive about it. He talked about how gold in modern societies with huge deficits, massive government spending, big government societies, gold stands as the protector of your property rights, where if you hold fiat currency in a bank account, you can have the value of that currency diluted all the way to zero through a hyperinflation event like the ones Tim's has mentioned here. Whereas if you hold gold, the government cannot print your money into nothing. You hold real money. That protects you from the money printer, from the government, from the deficit, from the politicians in Washington, D.C. or here in Canberra that just draw up new bills to spend money like nothing else and don't even think about how to balance the budget. I mean, balancing the budget, I haven't heard that in the political sphere for, over 5 years now. No one even talks about it anymore. And that's one of the reasons that makes me so bullish on gold and silver, is that big government, big spending, big government deficit, financed through the money printer, that's the name of the game at the moment. That's why we're having a massive inflationary event across the world, not just in Australia. I mean, cost of living crisis, whatever you want to call it, it's caused by the money printer. And the answer is as old as time itself. Alan Greenspan knew it. We know it. Gold. You cannot print gold. It is that simple. And that is why a yellow metal that you pull out of the ground has gone up 30% in price so far this year. It seems crazy, and that's not gold becoming necessarily any more valuable. That's just the dollar that gold's priced in losing its value by design. By design. Fiat currencies are designed to lose value. The central bank has an inflation target of 2% per year. So they design the currency to lose 2% of its value every year.
What's that over 10 years, Sam?
Oh, well, look, I can't do the quick maths here, but you
lose half of your value.
The idea is that this is all by design, ladies and gentlemen. This is the system as it was designed. It's not broken. It was designed to be this way. And there is an answer. An answer as old as time. Gold and silver, 5,000-year history is money. Bitcoin, something new, something exciting, something a little bit speculative. With high risk comes the potential for high reward. So if 30% for the year is not good enough for you, hey, have a look at crypto. And if crypto's too risky for you, hey, have a look at gold. But whatever you do, holding fiat currency in a bank account that pays you, 4.5% a year, that's moving backwards. That is moving backwards, whereas you could be moving forwards.
Could I just add to the statement of my money is in the bank, right? Let's break that statement down, if you will, kind Sir Joel. First of all, what you have in a bank account is not money. So that part of the statement, my money is in the bank, is false. Secondly, it's not in the bank. They don't hold anything there. You can't go challenge you. I mean, your good friend and relative Bernard did this recently.
John Bernard, when he tried to get the money out of the bank.
Money out of the bank. That was hilarious.
That was funny.
It was hilarious, right? The money is not in the bank, right? And it's also not money. And it's not yours, right? You do not have access. You don't control it. So this whole statement, my money is in the bank, it's safe, is false, ladies and gentlemen. It's a false statement, wrong from start to finish. So when somebody tells me, and I come from a Lebanese immigrant family, so for them, cash, put it in the bank account, it's safe, I have to break it down a lot. It's not money, it's not in the bank, and it's not yours. You got to get onto a gold standard. You got to get onto a Bitcoin standard. If you truly want to say my money is safe, you need to be holding Bitcoin and gold. Otherwise, all you've got is a counterparty relationship with a bank where you've got credit risk. You don't have the money in there in the first place, and it's not real money because it's just currency that they can print. They control the value of it. So that statement should just be completely eradicated from every people's vocabulary, and would be actually a better society for it.
Well, that leads into this story with regards to the Commonwealth Bank basically saying, look, we're going to charge customers a $3 withdrawal fee if you've got a certain type of bank account. Now, this is something that they had to put a pause on because there was so much public backlash. And when they came out and decided to speak on why they decided to do that, the head of the bank basically said, sorry, this was a communication problem, and what we were intending on doing, and maybe he has a point, but I don't think he does, but maybe he has a point. He was saying this would have benefited 90% of bank users for the transactions they were doing. They weren't doing these sort of transactions, where with 10% it would have been worse off for them. But I think that the public, they sense the system is against them right now, and they're having all these restrictions on them with regards to taking their money out of their bank. They're being asked their questions. It's not money. It's not money. It's not what you're saying.
And this is the problem, guys, that, they can set the terms and conditions of how you access your funds, right? That tells you everything you need to know about what it is, right? It is not money. It's permissioned. Right? If you have to go in and let's say, John Bernard walks into a bank and he goes, I'd like to withdraw $10,000, please. And you get the question, what's it for? Right? And he was so funny. He was like, oh, strippers and hookers. And, it was what a stud. It was, I was stitched up. Right? Who cares? It's your money. It's your currency. The bank
when
wasn't
you withdraw cash in Australia, the bank...
Sorry, mate, I found the video. Do you want me to play it?
Play it. I want people to see it.
I check this
When
out.
you withdraw cash in Australia, the banks want to know why, so let's go tell them the truth.
How much?
Around 6,000.
What is it?
What is it for? My missus thinks I cheated on her last week. She's doing my head in, so I needed to give her some cash and a necklace. She doesn't like flowers, she just likes designer handbags and shit.
Sorry, do you?
No worries. I don't know why it's important for the bank to know. It's money.
I have to ask.
I've got to go to a beauty salon to bleach my arse. There's a bleaching package, and they said you can make it up to 3 shades lighter.
Drugs. The devil's lettuce, you would know.
That's what you want. Put John Bernard.
I don't deal it personally. I just connect people together.
Whatever you do, it's your business.
What's the money for?
Yeah.
Does it matter?
We need to ask customer why.
I need it for steroids. Summer's coming up, Stereosonic festivals. I need a shred for summer. I mean, if you must know, I'm transitioning to be a woman, so I have to pay for the surgery. It's an expensive surgery. It's not covered on the Medicare.
I've got to say quickly, I actually used that line about the sex change at the bank myself. I was in there withdrawing $5,000 cash a few weeks ago, and the lady behind the counter asked me, what do you need it for? And I said, I'm getting a sex change. And congrats to her. She looks me dead in the eye. She said, oh, you're going to need to shave that beard first.
This is why I love this, because it's like, if you don't laugh, you'll cry, right? And that's the kind of situation we're dealing with here, ladies and gentlemen. Get your funds out of the commercial banks now.
Okay, so can I add, because this is fabulous. I love what's his name, John Bernard.
John Bernard.
John Bernard. I've seen that video. That is just a classic. I love the whitening one too. But I want to mention something that we've missed here, and this is critical. And that let's not forget that in 2018, APRA modified what laws? The bail-in laws. Bail-in laws. Now, what's a bail-in? A bail-in is when the commercial bank is not bailed out. In other words, they're going to take your funds. Oh, but people say to me, Mr. Guy in the Hat, that's what I'm called on my channel, Mr. Guy in the Hat, but the banks are insured and we're going to get the first $250,000 back. If you hear somebody say to you, if you hear a government organisation say to you, don't worry, you'll get the first $250,000, what they're actually telling you is they're going to collapse the system. Why else would they be guaranteeing you that? Now, here's a couple of fun facts. First of all, if you have a look at the commercial banking system in Australia, we talk about the big four. Basically, different colours of a $10.6 trillion asset fund. They're all part of the same organisation, essentially one and the same. There is $1.2 trillion of unsecured deposits in the big four commercial banks in our country. Now, here's an interesting fun fact. What are they insured for? Are they insured for $1.2 trillion? You would think so. Yes, because that would, of course, secure everybody's funds in the case of a collapse. No, they are insured $20 billion per institution, which is 4 times 20 equals 80 billion. Now, I'm no great mathematician. I'm still looking sideways, I realise that. I'm no great mathematician. But What I do want to say is that if you took 1.2 trillion and you minused 80 billion, what you've got is the bit that's left is what they're coming for. That is the bit that you're going to pay for. Around about the time, I would say, if you see a commercial bank collapse, or if we see that kind of collapse, it'll be back to 1933 when 10,000 commercial banks collapsed, by the way, and in an effort to save the banks, which of course they did neither, FDR closed the banks down on March 633, which of course was a total disaster. He called it a bank holiday, by the way, and it's still called a bank holiday to this day. But my point here is, why would you be sitting in a commercial bank with cash right now, knowing that they, if they were a train wreck tomorrow, they are covered for a tiny, tiny amount? You're an unsecured depositor. I'll also share something else with you, that 9 million consumer accounts, when the commercial banks were shut in 1933, all that happened was the Treasury put a line straight through 9 million consumer accounts. Do you know how many lives were destroyed in that pen stroke? In that move right there, people were destroyed. And what happened? They turned to what asset? The only asset that was left in the black after Wall Street reached 10% of its original value was physical gold. So what did the Treasury do? They said, well, hang on, if people like Sammy and Bish are going to go out and use physical gold, that makes them more powerful than the commercial banks, so we can't have that. What do you think they did next? They confiscated gold, of course, and that's fundamentally what happens when a currency fails. So yes, these assets are absolutely critical. I know what the next question is going to be: why wouldn't they confiscate it again? And there's a very good answer for why that's not going to happen. But one of the big problems they've got, and this is where I'll bring the guys back in, is you've now got an asset class that never existed in 1933. You've got digital assets, decentralized assets. Bitcoin is a living nightmare for the central banks. In fact, Bish, can you tell us what our beautiful central bank governor, Michelle Bullock, said about Bitcoin? I mean, apparently she's an expert on it.
Yes. So, dear Michelle, if you're watching this, just know that I despise you, okay? But moving on, right? The first thing that she said was Bitcoin is a speculative asset. It's worth nothing. It's just a trading vehicle, and so on and so on. And then in the same statement came out and said, I don't understand it. In the same statement, lambasted it, said that it's speculative, all that. It's not really good for anything.
Now she's a central banker, though. I mean, let's
just poster child for central banking, right? And and she went out and she said, but in the same breath, this is what's comical about it. Public statement, bashed it, and then said, I don't understand it. And that's very telling, ladies and gentlemen. It's very telling of the IQ level to be required to be a central banker. Now, jokes aside, right? Bitcoin, it's not money. Bring that up.
Bitcoin, it's not money. Bitcoin has no role in the Australian economy, Bullock says.
And in that same statement, she says she doesn't understand it. In that same statement, which is so telling, ladies and gentlemen, because there's two types of people in this world, right? Those who understand Bitcoin and those who criticize it. And they're mutually exclusive. They don't interact with one another. It's very easy to be critical of something you don't understand, right? Yeah. Which is perfectly fine. But then once you spend any kind of drop of, using your brain cells and learning about it, yes, it hurts in the beginning because you're learning entirely new concept. It's an entirely new asset class. It's only been around for 14 years. I can appreciate that, right? But once you wrap your head around it, you understand the liberation that's coming, right? Dare I say the liberty that is available to you, right? This is what's so powerful about Bitcoin and digital assets when you combine them with a commodities portfolio. It's literally the most sovereign move you can make. And this is the thing that I always tell people. If you want to be truly political, vote with your wallet. That is the biggest. Voting in the polling station, it matters. I know this is something that you talk about greatly, and I won't air on your domain. Joel, that's your topic.
Please do air.
No, I talk about crypto. That's me. I'm the Bitcoin guy. But really what it comes down to is that the biggest political statement you can ever make in your life isn't at the polling booth, right? It's with your funds. It's with how you allocate your capital. that is the most political statement you can ever make. Sammy can speak about that on the gold and silver side. But, if you decide to opt out of Aussie dollars and you decide to opt into Bitcoin, digital assets, commodity assets, you are now sovereign. You are now free. You're free from inflation. You're free from the money printer. You're free from, the massive government deficit. You're free from a household debt to GDP ratio, which is absolutely climbing. Australian consumers are some of the worst consumers of credit, and that's not because they're irresponsible. It's because inflation is so bad they have to take on consumer credit to be able to make ends meet. Personal savings is down the absolute toilet here in the country. It's hit rock bottom levels compared to the last 20, 30 years. Really bad. People aren't able to save, so they're taking on massive amounts of credit just to be able to afford to get by. We have the solution, and it is a political statement, the most political statement you can make in your life without having to be, hoorah, going to, Canberra and, protesting. This is a silent protest that you make by taking the dollars, Aussie dollars, out of the bank, putting it towards digital assets like Bitcoin and physical assets like gold and silver. It's the biggest and the most profitable political statement you can make.
Yeah, I was just going to say, I'm reminded of that scene in The Matrix with when Neo's walking through with Morpheus of Sydney, and you've got the CommBank logo which pops up there during it, and Aussies are just like, hey, that's that's the meme. That's exactly what's going on. We're in the Matrix, and the banks are trying to do this. The biggest bank in Australia. So I look at all of this. You just came back from the crypto conference. Isn't it a bit, of a difficult relationship? You've got these banks, big four banks, they donated, and whatever you think about these issues, but they all donated $2 million each or something to the voice referendum, which Anthony Albanese was trying to get across the line. You got these banks, they're also donating, and their corporate wing, their HR wing, they're doing all these LGBT things, these window dressing things that make the company look more attractive. Again, whatever you think about those things, just park it for a sec. But it's like, how can we hope to see the government do something on the regulatory end of things to give a lot of Aussies confidence in this? And that's what they're worried about. For me, I'm like, look, I don't mind. I'll just go into it because I understand the technology and whatever. But there are a lot of Aussies and people in the world out there that are like, hang on, but what are the laws on the books about this? Which are always 20 years slow. But is it a bit of a difficult relationship because we've got the very organisations that are funding the government through their donations or their direct or indirect donations to these political parties and their agendas? What are your thoughts on all that?
It's called mental illness, right? Very simply. If you're looking at the government and the banks to tell you how to, it's the same problem. It's genuine mental illness to look at the government and say, tell me what to do, please, right? The same government that you don't trust, the same government that you've got issues with, the same government that's taxing you, the same government that's printing currency, the same government that is putting you into poverty, you then look to them. It's Stockholm Syndrome. It's a genuine mental illness. You look at them and you go, how should I be safe from you? You understand how disturbed that is? I couldn't care less about what the regulations say. Now, look, regulation, I'm not against it. I'm not this cowboy. I run an Australian business. It's called Stormrake. You can find us on 10 Queens Road. We're super accessible. We're AUSTRAC registered. I'm not against regulation. But looking as an investor, right, as somebody who wants to protect your family's wealth, looking to the government for help, for guidance, is incredibly irresponsible. Because let me tell you something, the government doesn't give a shit about you.
Can I jump in? Because I wanted to bring Sam in on something that I think is critical to this conversation. We've missed another thing that I think is critical, because I love what these boys say. There are the 5 pillars of power that we see constantly: education, ecclesiastical, political, health, and monetary. Sam, and this is a direct question, surely, our education systems, that, do you remember how you went to school? Mm-hmm. And the education, here I am sitting sideways again. I can't stop, because I'm so used to being the interviewer. You know how you went to school and they taught you about gold and silver and how... Why are you laughing, Sam?
Sorry, Tim.
Can you be serious for a minute? I'm going to let you take it from there.
Let me just run with that, Tim. So I remember being in primary school here in this beautiful country of ours, and they came in with the Dolomites account. So, you know, you learn to save in a bank account. They got you young. You know, Hitler knew about getting him young. Point being...
A couple other people did too. So.
Yeah, Epstein. Point being...
You guys are in the right place.
Yeah, we're very safe here.
My audience
Very
aren't
safe.
flinching. They're like, I like these guys. So, you know, don't...
I'll keep running with that.
You're not talking from experience there, Asa.
Oh, no, absolutely not. But point being is that they know to get you young. They know to get you when you're impressionable, when you don't know any better. And for me, I went all the way through you know, higher education. You know, doing a finance and economics degree at university, and they taught me sweet F all about gold and silver. They only taught me 2 things about gold. The first of which they taught me was how to trade gold futures contracts, derivatives. Not getting physical gold, but trading on the price of gold, trading paper contracts. The second thing they taught me was central bank gold leasing, where they said, hey, the RBA is holding 80 tons of gold. That works out to about 3 grams of gold per person.
Where's the gold?
Where's the gold? It's in London, and we can't audit it. Don't ask questions further than that. Sorry. But the point being is that we've got this gold and it's sat there and it's doing nothing for us. So, you know, what we can do is we've got these budget deficits. We've got to make them better. So we're going to lease the gold out to these investment banks, JP Morgan, Goldman Sachs, you know, these guys. They're going to pay us a yield on the gold. And then we've got a paper promise from them that they're good for it. And for me, I put my hand up in uni and I said, excuse me, why are we giving the asset that backs our currency to investment banks that need a bailout every time the global economy takes a sneeze, in exchange for a paper promise and a little tiny bit of yield? This is insanity. This is absolute insanity. You've forgotten what the gold's there for. The gold is there to keep the currency safe, and you're just leasing the gold out to institutions that go broke all the time. What, for a tiny little yield? What is this? And that was all they taught me about gold. That was it. That was the entirety of it. I had to learn everything else about this asset class on my own outside of the university system. Talking about education for a second, who makes these courses? Banks. I mean, when I was in university, they tried to push modern monetary theory on me, where they said, Sam, now this was a little while ago, I was at uni, they said, Sam, since 2008, we've printed a boatload of currency, a boatload. And here's the thing, inflation has remained remarkably low, around the 2% target. Therefore, Sam, printing currency does not lead to inflation. I said, hold up. What did you just say? Printing currency does not lead to... And I said, no. This is not education. This is not education. I paid a lot of money for this degree, and this is not education. At that point...
Sammy, how did they justify that, though? I mean, how on earth do you justify the only thing that causes... Because inflation is the expansion of something, and since we're talking about currency and the expansion of currency, how else do you expand a currency if you don't print it?
Well, and here's the thing is that their entire logic was, but Sam, look at food prices and look at all these prices. They haven't gone up. We've printed all this currency, but prices haven't gone up. And something that I'll mention here is the Cantillon effect in economics. So the Cantillon effect is that inflation can be in different parts of the economy at different points in time from the money printing. So yes, we printed a boatload of currency since 2008, and so far that has not really flowed into consumer goods. It's flowed into assets, the stock market, the real estate market. They're in, you know, nosebleed bubble territory here. You look at the valuations on some US tech stocks, it's insanity. That's where this money printing has gone so far. But what we're seeing at the moment, in my humble opinion, is we're seeing a rotation back towards the commodity sector. That's why gold's up 30% for the year. We're seeing people rotating back into real world commodities, assets, things that are real. And that has pushed food prices up. If the price of wheat is up, say, 50%, well, then what do you think the price of bread's going to do? So commodities are in a bull market, all commodities, soft commodities, hard commodities, gold, silver, oil, wheat, corn, soybeans, it's all going up, all of which hurts the average consumer, but all of which benefits commodity investors. And that's why, for me, I've decided to launch a business that sells commodities, precious metals, money, things that keep you safe, things that perform very well for you, and things that are sovereign, will protect you from the money printer.
I mean, like, if you look at the Aussie dollar, what the M3 money supply looks like over the last 40 years, it's increased by 26,000% increase over the last 40 years. is how much they've increased the AUD supply by, right? And you look at that, and a significant chunk of that accelerated over COVID because they said, 2 weeks to flatten the curve. Remember that one? We're going to print a bunch of money. We're going to pay you to stay at home, right? 26,000% increase in inflation over the last 40 years, and they have the audacity to tell you that that's not going to affect, prices of something. So all that inflation is just you require more of the same currency to get something. Now this obviously affects Bitcoin. Bitcoin's very sensitive towards expansion of money supply, and this is why I am relentlessly bullish on Bitcoin and of course on gold as well, is that they will never ever stop expanding the money supply. Let's say they reset the currency. This is something that Tim speaks about all the time, right? And let's say they go towards a central bank digital currency. It'll require 10 Aussie dollars of what we know today as AUD to get one new Aussie dollar central bank digital currency, for example. Your net wealth, congratulations, is now evaporated by 90% because that's how a 10-to-1 conversion works. In that scenario, the new currency that they create, this central bank digital currency, will be inflationary as well, because that's how they operate. So even if they reset the currency and they're like, oh, this is a new system, new paradigm, we're much better now, look at how little of it there is, you give it 10, 20, 30 years, they'll expand it just the same, right? Because they're addicted to it. I don't know who said it once, but it's like, fix the money, fix the world, right? I'm not a utopian. I don't think that if we go towards a Bitcoin standard, go towards a gold standard, that all of a sudden there's no more evils in the world. Things are still going to go wrong. We're still going to have to deal with, people, which is where friction comes from. But nonetheless, if we fix the money, I believe we fix 90% of the problem. And that's why, to what Sam said, he's set up a bullion dealer. I've set up a crypto brokerage, and I want people to get access to these assets seamlessly, quickly, phone call, email, and then I want them to be able to trade these assets between themselves and denominate their wealth in Bitcoin and gold. And if they do that with me for a year, they do that with me for 2 years, 4 years, 5 years, 10 years, I will make them extraordinarily wealthy without having to take on any counterparty risk.
Tim?
I want to mention something very important about the word money. Here I am turning to my side again. Here's the thing, that if you have a look at legislature, constitutions and things like the Banking Act of, let's have a look at the Australian Constitution. Parts of it were taken from the United States Constitution. If you have a look at the US Constitution, Article 25, there is an interesting clause in there. It talks about something called money. It's interesting because it doesn't mention currency. And the way they describe money is as follows. If you have a look at, I believe it's Article 25. And it says that debt can only be extinguished using gold coin. Now, isn't that interesting? I'm not talking about a $2 useless, worthless base, because you notice they call them gold coins here, just to give you this impression somehow they have some value, but they're useless base metals. The other thing I think is worthy of note here, just in the legislature, is the Banking Act of 1959. And there is no reference to one word in the Banking Act. Do you know what word's not mentioned once? Money. Because we're not dealing with money, we're dealing with currency. And I also want to add one more fun fact, and that is our currency is it Article 10? Is
Sorry,
it?
this is 25. Article.
It's been a while since I've looked at
That's
Article
all right.
25.
No, apparently it's Article 1.
Article
Section
1.
10. But look, this might be a different part pertaining to gold.
But I guess my point here is these are the monetary system. This was in 1789 when the United States Constitution was ratified. The United States was on a bimetallic standard. In fact, it could be argued it was on a silver standard back then, and then it went on to a bimetallic standard. So we basically traded the values of silver against gold. There was no currency as such.
Oh, so both. Right.
Both traded side by side. And the most valuable, and I'll get some buy-in on this one too, of those two assets by far and away as a trading asset was silver, because of course that is the monetary system of the common man. So, the United States was largely built on the Spanish silver dollar, which was a 400-year empire. By the way, the Spanish silver dollar virtually didn't change value in 400 years. And the price of gold, since the United States, of course, ratified its first Coinage Act in 1792, has changed the total movement in the gold price in the United States. Are you ready for this? is $22. I think we're talking about $22 to $23. It was first floated in 1792 at $19.75 an ounce. $19.75. So you want to jump in the DeLorean and go back and pile up. $19. It's now valued on the US books at $42.22. That is a movement on the same book of $23. The gold price in 200 years-ish moved a total of $23. That is what you call a stable monetary asset. I don't know. Have you got any thoughts on that, guys?
Absolutely. So people forget that the dollar is defined in the US Constitution as a certain weight of silver, around 700 grains or so. Fact check me on that. But that was what a dollar was defined as in the US Constitution. Silver, a weight of silver. And look, you're absolutely right. It was the trading asset. It was in all the coinage. Up until the 60s, it was still in the coinage. You can still buy American coins with silver content today from before 64. That was when they stopped putting silver in the money. That was when money stopped being real money. In Australia, it was 1966. You can get the round 50-cent pieces, 80% silver. So it says 50 cents on it, but today they're worth about $15 each because the silver price has gone up that much between now and then. Silver holds its value. Fiat currency is designed to lose it. So absolutely, people forget that. You're absolutely right. In the US Constitution, it says that all debts, public and private, must be paid in either gold or silver. It explicitly forbids central banking. And here we are today with the Federal Reserve, America's third central bank, that prints money out of thin air and is a private bank with private shareholders that prints the world's reserve currency out of thin air, ladies and gentlemen.
It's pretty grim. I mean, I wish there was some sort of solution. Wish there was a solution.
Well, let's pivot, because I find this absolutely fascinating. This is a total re-education for me, because obviously I also went to uni and school, and I've got all this indoctrination, and this is malfeasance with regards to what they're doing to our kids and to our uni students that are paying so much money for these degrees. But let's take a step back. There's going to be a lot of people listening right now, because the majority of the listeners for my show is actually older women, older men, and they're thinking, but Joel, but panelists, property. It's traditional. It's something that it's become a bit of a religion in Australia, and they're like, well, why should I? You know, in Sydney, there's a limited amount of it. You've got the water to the east, to the north, south, and west. You've got National Park. And there's a limited amount of land here. So why is it that I shouldn't invest in something? You know, Bitcoin is like as you're saying, it's a limited supply. There's a limited supply of land in Sydney. It's going up. You know, it's the third most expensive in the world, second to Singapore and Hong Kong. And you know, it's a traditional thing. And I get something physical. It's in front of me. There's something tangible about that. What would you guys say to those people?
I'll say one thing, and then I'll leave it to the boys to really put it to shreds. This is kind of Tim's domain. But I'll say one thing: counterparty risk. How do you just mentioned something really good there, which is it's one of the most expensive property markets in the world. Now, not sure of your listeners, how many of you guys have got 20 mil lying around to buy a Point Piper property? All right, let's not go that extreme. Let's say how many of you have got a couple of mil to afford something in the eastern suburbs of Sydney, right? How many of you got a mil or 800K to afford something in the western suburbs of Sydney? Not a lot. So how do you get access to this asset? You get a mortgage. Who's your mortgage with? The commercial bank, who then is indebted, and the money's coming from the central bank. It all comes down to counterparty risk, and the only way you can get access to these markets, these property markets, is exorbitant amounts of debt. And when you're in a debt-based position, so we all went to school here, we all went to uni, right? I didn't do it very well, but that's not here or now, neither here nor now. A balance sheet. There's only two ways you can balance a balance sheet, right? You got assets, you got liability, and the difference between the two is your owner's equity, right? What Sam, Tim, and myself advocate for is an asset-rich position. Asset-rich. No debt, right? Taking on debt in an environment where commercial banks are at the risk of collapsing, and then when that collapses, you go down with them, right? That's the problem. That's the counterparty risk that I'm talking about. You can buy, Sammy, how much is that silver round in front of you, mate?
Oh, it'd be $65 today. It's got beat the reset on it, so
Yeah.
Shout out there.
So you can get around for $65. You can buy, $1 worth of Bitcoin. I won't get you much, but that's fine, right? What it comes down to is that these assets that we provide access to does not require exorbitant amounts of debt to get access to, and also liquidity. 24/7 market. That's how accessible crypto market is, right? Insane liquidity. I have people who call me up. We're in December now. People call me up on Christmas Day. Bisher, I've had a fantastic year. I'm going to be going and spoiling the kids and the missus and maybe my husband, whatever, right? The wife, the girlfriend, the mistress, who cares, right? You want to get liquidity? Bang, you can instantly sell. I want $10,000 AUD in my bank account. Sell me down a bit of Bitcoin. I'm taking them out on a holiday or whatever it is, right? 24/7 access, ultimate liquidity. You can't do that with a patch of your yard. You can't go up and dig a square meter and then put it on the open market and get some liquidity. So the problems that I have with the real estate market comes down to the amount of counterparty risk you need to take on to get into those positions, and also the liquidity that it ties up and puts you into is a very precarious position, because you won't be able to get liquid quickly, and you're taking on a ton of counterparty risk, which is, in my opinion, not worth it. I'd rather be incredibly liquid and not have any counterparty risk.
Yep. So something I'd like to say on the note of property is, for me, I zoom out, I look at the big picture here, I look at the amount of debt that different state governments are in, that the federal government's in, and I compare things to Victoria for a second. I know that we're here in Sydney today, in New South Wales, but living in Victoria, being a Melbourne-based bullion dealer, I'm in the Melbourne market. And if you look at the Melbourne market for property, it's coming off at the moment in quite a nasty way. And why is that? It was because land taxes in Victoria have been raised substantially. Why? Because the government is broke, ladies and gentlemen. So for me, again, harking back to my uni days, something they taught me in uni was that the best asset class of all to tax is land. And why is it land? Well, because land has a fixed registered address with the government, that if you don't pay your land tax, they're going to rock up there with guns and take your land from you. So you better pay. Now, when you look at the debt system, the debt that governments are in, state, federal, they're going to have to fix that. They're going to have to come with taxes to fix that. And politically at the moment, land tax in Victoria at least seems the way to do it. Now you can see what the impacts of jacking land tax through the roof are on the market. It's putting serious downward pressure on prices, because investors are offloading properties en masse because they can no longer afford to pay these exorbitant land tax bills. We're talking land tax bills that have gone up by 4x in 4 years. It's insanity. It's no longer worthwhile as an investment class for a lot of these investors, which is why they're piling out and they're piling into assets like gold and silver. I mean, Tim will back me up on this one. I have a lot of Beat the Reset clients who are selling properties, putting it into gold, silver and Bitcoin with Bisher and myself, because they've been buying this stuff for a while. They've seen what it can do from a gains perspective for their portfolio. They're looking at their property that's either moving sideways or down in price. They're looking at the performance that cryptocurrency and precious metals have had for the last few years, and they're going, why am I sat in this asset that's doing nothing for me? Here's the thing. If you bought a home for $2 million in 2021 in Victoria and you're selling it today for 1.8, 1.7, 1.5, it's not even that big of a loss. But it's the missed opportunity. Gold was $2,200 an ounce in 2021. Now, Aussie, we're talking over 4,000. So that 2 mil could have been, almost 4 mil. But instead it's 1.5 because you bought property instead of gold. And again, Bisher will talk about what that could have done in crypto. But the point being is that, in my mind, property's not the place to be at the moment. And that's really hard to say to people after a 40, 50-year property bull market. They're thinking, mate, what are you talking about? Property's great. Well, look around you.
Yeah, I need to add something. That's fantastic, Sammy, 100%. I want to add something to do with, most people listening to this, I know what they're going to do straight away, because we get this as well. And that is that, what are you doing? Telling me, where am I going to live? You're telling me to sell my real estate and buy gold. You can't live in a bar of gold, Sammy. You can't live in a bar of silver. And I've done this dance 1,000 times. But here's the thing. If you have real estate which is fixed, what people don't understand, and when I spoke at the National Gold Conference this year at Crown Towers here in Sydney, I spoke to a room full of investors, and I said to them, if I was to look at the next 5 years of investment, there are no fixed asset positions that are really plausible here because the market is moving digital. We are watching not only land titles transition to digital, we are watching, of course, the introduction of something called utility and security tokens for the trading of real estate. You are watching the Reserve Bank of Australia systematically raise its interest rates to the point where it is a wipeout for most people. They moved 12 times in as many months. And now, of course, they're sitting neutral, watching to see which way this pendulum's going to swing. The problem for real estate is that the holes in the real estate market are so vast. We have a constitution, section 51, subsection 31, with a compulsory acquisition clause. We have the Land Transition Act of 1958, designed to take all deed titles and transfer them into government guarantees called Torrens titles. You have, of course, the Land Acquisition Act of 1986 and 89. These are there because these mechanisms are designed to sit as a catch net, as a safety net, when the common man goes completely upside down. What upside down is in an investment, upside down is when you end up with the debt and you lose the asset. So you're still stuck with the mortgage, but of course you sold out because you couldn't pay your mortgage anymore. And we're seeing this. We have an $11 trillion real estate market in this country. We are number 2 to 3 in the world. No one really knows because China's the worst. Canada and Australia are probably equal number 2. It's a fight between what's worse, Melbourne or Sydney. They're both pretty bad. In fact, we're watching now in our businesses, in crypto, and the boys will back me up on this one, that in cryptocurrencies and the precious metal space, we are watching something called capital outflow. Capital outflow is based on something called confidence trades, and it happens when the market loses confidence. It's got nothing to do with value. It's got nothing to do with anything. It's when the common man says, oh, hang on a minute. I have a $800,000 mortgage. Yes, I've got a beautiful house in some middle-class suburb, but I can't feed my children. So the first thing you're going to do is you're going to try to sell out of an asset. And what I mean by capital outflow here is you're seeing an immeasurable amount of real estate coming up onto the market. We're watching perhaps a 60% movement in stock at the moment. You've got 40% of stock not moving. I take calls all day, every day, from clients who say, Tim, I can't sell my property. I can't pay my mortgage. What happens next? Hello, section 51, subsection 31. Hello, because if you can't pay a mortgage, I mean, your bank's going to foreclose. They're going to sell it to the lowest bidder. They're going to sell it to a trust fund or a corporation or anybody that will buy it. We're not seeing a lot of buyers for middle-class real estate. It is a buyer's market. The problem you've got on this buyer's market, and this is what most people have missed here, is that no one has anything to buy with. Unless, of course, you're going to bring in enormous amounts of immigration and try it that way. That's another way you can probably do it. But this is what happens when you get capital outflow. And where do you think that capital outflow is going? And my final point on this, because I rant for hours on this on my own channel, is when people say to me, and the boys will know this straight away, is, are you telling us that we have to rent? Now, this is a social stigma in this country. Yes, I'm saying the best position, from my opinion, and this is a guy that's really looked at the future markets. I'm talking beyond 10 years. I've written 2 books on this. I've got a new book coming out. The book I'm coming out is about, the title of the book is called 2033, and it's me looking back and telling everybody what happened, not what's going to happen. It's not a Simpsons, it's a Simpsons episode, sorry. Yeah. So I'm looking back and telling you what happened. And I can tell you that the way these markets are going, this next reset has nothing to do with the confiscation of gold like it did in 1933. What this next reset is a total attack on fixed asset ownership. That is exactly what is going on here. And if you think that these things are operating, everything you are watching looks like it's kind of disconnected, like you're watching real estate markets go up and down. You're watching the interest rates go up and down. You're watching the inflation. These are all connected. Every single thing you are seeing is a perfect strategic plan to move away from fixed asset ownership for the purpose, and this is where people like Bish get super excited, trading these assets as tokens on a blockchain. And I can tell you right now, and people don't know this yet, but they're going to find this out, that you will not be talking about real estate in the way you talk about it 5 years from now. What you'll be talking about is security tokens and utility tokens. That's how you will trade this. And renting is the best position because renting is zero debt position. When you rent, you have really no counterparty. I mean, if you don't pay your rent, bye-bye. And people say to me, well, but if I own my property, surely I'm a lot better off. Well, here's the problem. If your kids are starving and the only thing you have is your capital tied up in this fixed asset, you have to sell the asset. And let me tell you, at the point at which your kids are starving, at the point at which you can't pay your mortgage, you're desperate for a sale. So but everybody else in your neighbourhood's probably in the same situation, and that's what we're seeing.
Someone I know, and this is probably the prime. Believe it or not, my audience is 66% women, mostly older women, then older men, then younger men, the younger women. That's the breakdown. But I have a specific person I'm thinking of right now. They have actually sold their asset. They've sold their house, and they're now asking me, Joel, what do I do with my money, basically? And I'm like, do you want my honest opinion? My honest opinion? And again, I'm a 27-year-old guy. This has been very educational for me. But if it was me, I would be renting. I'd be using that $1 or $2 million, whatever you've got, to actually invest in various assets. I'd be diversifying my portfolio. I'd have a set percentage in crypto, 100%, because it's me and I, know what I'm doing with regards to that. Or I'd give a bit of it to, obviously, the Stormrake guys, a link in the description, so that they can trade it on maybe a more risky sort of portfolio for crypto, a little bit on that, and obviously the majority in Bitcoin, and then a bit in, bit in gold, a bit in maybe even property still as a rental thing, so that you get a high cash flow or whatever. But yeah, there's a lot of people listening out there right now. They are getting to a very interesting point right now where they're like, well, I want to diversify. I want to dip my toe in this market. I'm still trying to understand it.
Can I show you something on value? I sent you something on Signal.
Yep.
Right. If you can bring that up for us, that'd be amazing, because we need to talk about value, right, and relative value. That's super important, right? When you got to compare apples against apples, right? Because it's sometimes hard to think about, a kilo of gold is what now, 130,000?
130, 135 between
right?
that.
Yeah, and then one Bitcoin's about 150,000. What's a home in Point Piper compared to Turak, and it's very hard to compare these. It seems a bit disjointed. Like, what's an ounce of gold against this?
Yeah, we looked at this last time.
We did, and I think it's super, super important to realize how overvalued real estate and debt is. How much capital, how much value is tied up in global real estate. Global real estate is a $379 trillion, that's in US, $379 trillion market, ladies and gentlemen. Global debt, things like bonds, which are both in the public and private sector, garbage asset, but it's $170 trillion, right? So you've got two things, debt and real estate, that commands the lion's share of where capital is tied up. Something that Tim mentioned is capital outflows, right? When people start realizing bonds are garbage, why would I want to buy, why would I want to enter into a counterparty arrangement with the government, right? Why would I want to enter into a counterparty arrangement with private corporations that are ultimately broke and are reliant upon helicopter money to operate? And then why would I want to be tied up in real estate, which is a $380 trillion global market? We make up $11 trillion of that, which is insanity. Such a small island nation of 25 million people, we make up $11 trillion of that $379 trillion bar. It's just about relative value, guys, right? I'm a numbers guy, right? I'm a crypto broker. I've been in foreign exchange prior to going into crypto. I'm a numbers guy, right? Relative value. I want to buy assets that are cheap, right? That have not yet gone through a biblical repricing, which is what we're going to be witnessing with gold, silver, and Bitcoin. They are massively undervalued. Well, how can Bitcoin be undervalued? It's $150,000. It's $2 trillion, guys. It's a tiny asset, tiny, right? Silver is $1.8 trillion. It's a tiny asset class, right? Look at that. Bring it up again one more time. Look at just the sheer size of these markets relative to gold, silver, and Bitcoin. I wish there was silver on there as well, right? Look, at silver would be just around where Bitcoin is, right? Yeah. That is a tiny, tiny sliver. Even if, let's say, 10% gets reallocated from real estate towards gold, silver, and Bitcoin, that's $37 trillion flowing into an asset that's worth $1.8 trillion.
Yeah. And
That's everything.
And
That's
you know
the
what's
end game.
astonishing? There's also these black swan events that you don't expect sometimes, but I think you guys would have the finger on the pulse. AI, how it's going to get a lot of people out of their jobs, and how we're going to see a lot of automation come in with a lot of these commercial buildings. A lot of these buildings you see in Melbourne, in Sydney, in Brisbane, and around the world. These commercial places, they're going to have to either be repurposed or, but all these people, all these assets are going to lose their value with regards to the highest and best use, because it's going to be all of a sudden, no, we actually don't need this asset anymore. It was a bit like during COVID with Zoom and everyone working from home. And all the big corporate money, it's going to start looking for other places to go other than real estate.
Can I jump in there? I mean, one of the important, again, to understand what you're watching right now, you need to look at the future. There is a very, very strong move to an AI future. The World Economic Forum is, of course, 1,000 corporate members and run by our beautiful friend Klaus Schwab. He's actually quite a gentleman. I've come to be quite adept at his voice. In fact, some people think I am Klaus Schwab. And he said, of course, you're all or nothing. But the question is, where did he get that from and why did he say it? And this is the point that gets missed here. So Klaus Schwab is renowned for something called the Fourth Industrial Revolution. We've had 3 prior. And, you've got it there? Is it?
No, this is the Aussie version, Reset, Restoring Australia After the Pandemic. This is from Ross Gnort. This is not a good book in terms of, this will tell you what they want to do for Australia.
Right.
This is like the Klaus of Australia.
Oh, Ross Gunnar. Yeah. So this is really where, again, you have to come out a little bit. These boys are writing close and great book. I haven't actually seen that.
You haven't? I saw it in 2020. I haven't read it through, but I had a gaze through the descriptions here, and it's like, okay, how can we basically reshape Australia in a way that works best for us?
Don't get me started.
Don't
get me started. But I wanted to say that when you really look at the future, it is a mind blow. And what's really happening is, and this is the most incredible thing, is that in the October of 2022 in Victoria, we became the first, together with Singapore, the first digital twin city on the planet. There are only 2. There are 195 sovereign nations, and we have 2 of them. Singapore, Bish was there recently. He saw what it's like to be in the 4D version of the digital twin. And, of course, we've got the other digital twin here in, not here, but in Victoria, my home state. Now, people, I've demonstrated the digital twin portal. If you ever want to see it and you want to share it to your viewers, get them to go to Digital Twin Victoria. You can take a full look around, what's it called? Virtual tour of the most incredible thing that has ever been constructed in an AI sense. And you are inside the world's most spectacular AI grid. It's called Digital Twin Victoria. You can go into the portal. It will take you months to drill down through the menus to see this place. Now, this was all passed quietly while we were all just coming out of the horror of COVID, of course. And it was done at a taxpayer's expense of about $400 million Australian installation. Now, the reason I'm telling you this is that this all ties in to the World Economic Forum's Fourth Industrial Revolution, and of course something called the post-scarcity economic model. We've spoken about this before, Sam. Now, the post-scarcity economic model is basically what it is. It's the World Economic Forum, which is essentially 1,000 corporate members. That's what it is. There's some of your favourites in there. And what they're doing is lobbying the United Nations, which is 193 sovereign nations, to take the world on a new path called Agenda 2030. Obviously, you've seen that. But the problem with it is, in their model, there's 2 fundamental issues, if people were to look at it. And it's available for you to have a look at if you want to go onto the World Economic Forum's website. And once you get over the immortal words, you will own nothing, you will understand why he said it. He said it because he's representing the views of 1,000 corporations who see something called an AI future and how to deal with a world that has no human intervention at all. All products in their model and all services are to be given to you either cheap or free. And it'll be sponsored by a government universal basic income on a central bank programmable digital currency. That is fundamentally the model. Now, the UN has accepted this model as being a really good idea. So when you start seeing capital outflows in Australia in real estate, what you're looking at is something that is part of a much bigger vortex. You are being drawn into a global shift towards an agenda that has zero human interaction. You mentioned, you're starting to see a lot of commercial real estate. You walk through some of these cities and towns and commercial real estates, it's a ghost town. Every second place is up for lease. But this is by design. And the way to do it is to collapse the currencies and to destroy the buying power of the currency. And that takes out pretty much all the infrastructure in one fell swoop. But the great news is that your government's about to ride into town and give you a solution. And it is, of course, a central bank digital currency. Now, once you put it all together and you see these digital twins, and as I said, Bish rang me from Singapore when he was there. He said, mate, you have to see the AI in this city. It was mind-blowing, and that's where we're going. That is a great example. They have the 4D model. We've got the 3D model in Victoria. It's to be rolled out around the rest of Australia. It is a full surveillance grid. It is beyond your imagination, and you can drill in and you can have a look. You won't be able to see the entire grid because you need certain administrator privileges to drill down into some of the cameras, but you can certainly see some of the stuff that they are doing, and it is mind-blowingly, spectacularly frightening when you actually look at it.
Yeah, I'm looking at it now. I'm just looking at the map of the city there. I'm yet to work out how to turn on the different features, but
well, you can drill down to things like, I'll give you an example of how detailed this map is. You can look up city pipes and have a look up. There's a scale for pipes. You want to see like what a 2-inch drain pipe's doing in the middle of Sydney. They will tell you, I want to see all the 2-inch drain pipes in the sewage system in Sydney that are 50% degraded at the moment, and I can bring that up on my and I showed it in my own console. It takes a little bit of getting used to. It's not easy to drive this system because it's heavily database driven and it's fully AI'd. Right. But you can look at any parameter, any feature, anything, including in the live models that I don't have access to, people physically walking around, so you can see people in real time. Now, the question becomes, how are you doing this in real time? How is everything being measured in real time? How does a pipe, a sewage pipe, know that it's 50% degraded from its original installation? And you can actually see colour schemes. It'll say, when you drill into the menus, it'll say, show me all the pipes that are kind of like 35% degraded. And I can bring up a map and overlay the pipes over the city, and I can drill down. And the other feature that's mind-blowingly fascinating, I'll finish on this because I could ramble for hours about this.
Oh, this is fascinating.
But it's done something unique. You can not only walk around the city, you can not only fly into and look at the buildings, you can look at a brick on the side of a house in detail, like unimaginable detail, but you can also go subterranean. There's a fascination. Turns out there's much more going on under the city than you realised. I know, shock horror, right?
No, but how is it they're able to monitor all of these things? I mean, it's actually insane. And what about the security threat? In terms of the security threat of having all that data in one place, I mean, if you know there's certain pipes or this or that, I mean, that's a security threat in a big way from a foreign adversary.
Yeah, the question is, where is this data being stored? How is it being stored? On what type of technology? You're talking trillions of terabytes. We drip fed this technology as if it sort of happened yesterday, and some guy, a poor paid job at Microsoft came up with a new terabyte drive, as if any of that's real. But these guys are running technologies that are so vast and advanced, it's difficult for us to understand and comprehend. So I guess the reason I bring that to your viewers is, do not think for a second that capital outflows in real estate is to do with the fact that it's just to do with the expansion of the monetary system. It's to do with a very clear shift away from a traditional way of living and into a completely encapsulated AI grid. And the final part of the grid, which has not been installed yet. Now, this is fascinating. Pretty much most of it's done. The bit that hasn't been done is the currency. That is the final part, because once they add digital currencies to this system,
it's the noose tightened.
Locks in. You are restricted. You've got negative interest rates. You've got currencies that expire. You've got what they call geo-fenced, geo-timed. So you only have a limited time to spend your currency. You will have, of course, instant debit, instant credit. So if you do something wrong, because of course this is driven by social credit, if you do something wrong, the question is who does deem it to be wrong? I mean, who are the arbiters of that? But if you drive through a red light camera, it's instantly out of your account. There's none of this administration. It's bang, it's done. It's like 3 points done. It's done. So it's a real time system. It's all aggregated in real time.
Yeah, and this is all set by the thought leaders over at the World Economic Forum. Their sustainable goals, Agenda 2030. If you haven't seen this graph, I'm sure you've seen that little rainbow circle.
Sustainable. Yes.
Yeah, sustainable. But yeah, all of these things locking in together with this this currency, and that's why, as to Bisher's point earlier, currency is king. If you can work out how to free yourself from the matrix system, from the comm banks of the world, then yeah, you can actually have prosperity for you and your family.
What's crazy about all of this is that it makes me so relentlessly bullish, right? It's just like I try to sometimes remind myself, I remind my clients all the time, you're not bullish enough, right? Because there's two ways you can respond to the information that we're sharing with you. You can either shrink away and get fearful and start to think about, oh, this is really grim, this is really heavy stuff, or it can empower you, can embolden you to make good choices, if you will, to then be able to go on and just be more bullish. Because I always tell people, you're not bullish enough, right? The only way you can really fight this battle is financially, right? This is the easiest way you can win, because politically, unless you're the Jammal types of the world, you're not going to have a lot of sway, right? And then the biggest way you can protect your family is through your wealth, right? And making those choices, making those capital allocations makes a big difference, right? It's not going to be it's not a cure-all. It's not a magic solution. It's not a one fix all. It's not a one size fits all. It does, we have to do battle with the tools that we have, right? And I say, vote with your wallet, be more bullish, make good choices, stress less, and control the controllables, you know what I mean? Because a lot of this stuff is outside of our control. They're going to be pushing this agenda. With or without us, we can kick, scream, fight, yell, shout. It doesn't, we're too insignificant to even worry about. So although that is good to know, and that knowledge is important and it's powerful, vote with what matters. Respond with how you can respond, rather than being alarmist or defeatist. Figure out a way that you can respond, and you can respond by being more bullish. You go out there, you get gold, you get your silver, you get your Bitcoin, you look after yourself, and therefore you're free.
And that's the thing, with regards to money, it's really interesting, because I am reminded of the American debate around money, and the fact that, the Citizens United versus the FEC case found that, money is speech. Money is speech. It is a part of the political process. And when it comes to trying to exercise your right as a free citizen of a country, you need to get involved. Yep, absolutely, with your money. You need to put your own mask on before you help the person next to you, figuratively, like as if you're on the plane. But at the same time, being in the political world, I don't want to wait for them to come after us. I want to go after them first. I want better politicians there, which will actually... you guys would have seen in the war room the different tools we have out there to bring up better transparency, whether that's the how to vote cards or what the parties are running on. Are they running on a CBDC or are they not? Are they like Trump in their policies on Bitcoin or are they not? That sort of approach. But only through greater transparency can we enact and breathe our values into politics.
Why don't we do this? Why don't we have Tim Manger as eternal president of Australia? You become our communications minister, Sir Joel. Sam is our finance minister. I'll be the war minister, and we just run the country.
Just fang it. Just mate. You guys have better things to do than that. Better things to do than that.
But it's a nice little exercise. But look, jokes aside, I agree with you in the sense that we have to. We have to vote with what we can control, which is, at the polling station, yes, in terms of what you're doing, but voting with your wallet just allows you to, emancipate yourself from, the shackles of control, and you're no longer having to be tied to a system which is working against you, right? You get your Bitcoin, you get your gold, you get your silver, and again, whatever percentage makes sense for you. If you're a bit more conservative, you know, you're risk adverse. You know, the most risky thing you do is you go down to Woolies and you do your weekly grocery shop, get more gold and silver, and get a ton of it if you like. But if you've got a bit of a risk-on approach, maybe you're young, 20s, 30s, 40s, and you've got your career ahead of you, you can afford to be more risk-on, you come to me. But always have that safety net with gold and silver to be able to operate. Like the way I look at it is, you know, imagine a high-flying trapeze artist and you're swinging around and you're doing all kinds of crazy things in the air. That's coming to the crypto market. It's a lot better and it's a lot healthier for you to have that safety net underneath you, which is your gold and silver, and then you add that risk on and you can, you know, experience that exhilaration.
I'm into that. Tim, I got to get you back. I don't know. You're based in Melbourne, are you?
I'll come back.
Mate,
I can fly up here anytime.
Right. I need to get you back because I want to see your book when it comes out, especially 2033, but you're welcome to come back soon.
I'd love to.
When is that set to come out?
March 2025, we're doing the book launch. So I wrote one in the October of 22. I wrote my second in October of 23. I tried to write my third in October of 23, October 20, what year is it? 24. But the markets went crazy and gold, silver ran, Bitcoin and digital assets ran, and I couldn't get enough time to write the book, but it's nearly finished now. It's in editing. So you'll see it about March. We're coming back. The boys and I are doing an Australia tour, and so these gentlemen will be on stage with me. We'll be launching the book. The book will be available, and it's a very fascinating book. So I'd love to come back.
No, you let me know. Absolutely. I want to push that book. It sounds like a great one. I mean, the idea that you'd have a cheat sheet and look back is awesome. And Sam, thank you so much. Pleasure having you here.
Thanks for having me, Joel. It's been an absolute pleasure. Love coming to Sydney with the boys here today and having a chat with yourself. Yeah, it's been a great time.
No, my pleasure. Guys, again, if you're listening, if you enjoyed this podcast, give it a like, subscribe, share it. And click the link in the description to sign up with Stormrake. Stormrake, they do work with Sam. Sam, did you want to shout out your company?
Absolutely. So Liberty Bullion, and that's the name of my business. libertybullion.com.au is our website. You can check out all the different gold, silver, and platinum products that we've got, coins and bars. We can ship to your door. You can come into the store. There's all sorts of ways of going about it. You can just give us a call if you want to have a chat. So yeah, feel free to reach out.
Cool. Ladies and gentlemen, I hope you enjoy your summer. I hope you enjoy your Christmas. I'll see you later. And again, if you're a subscriber out there, if you are someone that wants to support the show, go to Buy Me a Coffee. There's a link in the description as well. Become a regular member. We do monthly live streams just for you guys where we can chat a little bit more. A few people have had some questions for me, like, Joel, what's your relationship with Ricardo Bossi like? What's your relationship with Bishop Murray like? What happened with this? What happened with that? This is where I'll be sharing all that stuff because it's away from the show. I can share more with you. It's more private. And many of you have already been pivoting over there in the last 2 days. I think we've had like 30 sign-ups as regular members. So God bless you guys. Thank you so much. I'll see you later. And have a good summer.